Devang, stay with us. Mayuresh Joshi from Angel as well joins in online. Mayuresh, it's a sub-expectation performance when it comes to both PAT and bottom line, or rather top line actually. But what explains this kind of a margin growth, almost 10.5%?
Afternoon, Aisha. I think clearly the expectation was that the aluminium sales volume would go up this quarter round, and the expectations on the pricing, because the LME aluminium pricing has been lower. So I think the EBITDA margins are expected to be lower. So it's a surprise on the operating front in terms of 10.2% that Hindalco has posted. But clearly I think the bottom line impact, as the other analysts were also saying, is because of the ramp up in Mahan and Aditya smelters, you would see a logical increase in working capital requirements, which would logically explain the rise in interest and depreciation costs. So the bottom line hit looks obvious for these reasons. But again, I think on the top line, I think the EBITDA would have increased more or less with the copper business, because the expectations were that copper TCRCs would be extremely strong this quarter.
Big spike up in the stock price as well. What do you do with your holding, or if you're looking at making a fresh entry point into Hindalco, given the kind of sentiment with the entire metal sector? Do you avoid this if you're already sitting on the stock? Do you use this as an opportunity to profit take? Devang, is my voice reaching you?
Yeah, it's reaching me. We'll be revisiting our target after the management commentary. Currently, we have a hold rating on the stock. So broadly, we are like a kind of negative on the metals and mining sector because of the Chinese news at the moment.
I just wanted to get a view, Mayuresh, the higher aluminium volumes which we were expecting, do you think that perhaps has been offset by the kind of lower prices that we've seen on the LME as well as the spot premiums?
Oh yes, and that would be the logical way of looking at it, because LME prices have come down both on a year-on-year and a quarter-on-quarter basis. And our expectations are that LME prices should hover around over the next couple of years between that $1,700, $1,750 mark per ton. Having said that, the Chinese devaluation has clearly impacted global demand and supply situation. And again, you would see prices coming through in terms of realizations going down. So in that sense itself, I think the premium spot estimates would be cut. But again, I think we need to understand what the management has to say about all this. And again, about the ramp up in the coal mines, because bauxite is 100% captive, but coal is not. So I think lower aluminium prices, what happens with their coal sourcing, all these things need to be watched out for before taking a call on the stock.
Okay, and a quick call on what exactly you'll be doing with Hindalco right now?
No, well, I think it's a wait and watch. We need to hear what the management has to say, where the beat has come from on the EBITDA front, whether they expect the TCRC margins to sustain for the copper business, their take on the aluminium business generally, considering the macro environment itself remaining weak, the ramp up in both their operations related to Aditya and Mahan, and the coal mines. So I think all these factors need to be watched out before taking a call on the stock. So largely we are neutral at this point of time.
Okay, Devang, Mayuresh, gentlemen, thank you so much for taking the time out and really analyzing Hindalco's performance for us. It's below estimates when it comes to both the top as well as the bottom line, but there's a big margin surprise, 3.5% higher for Hindalco, and like both our experts were commenting, that they're going to wait by for the management commentary, get back to the drawing board, and then rework the targets and call on the stock of Hindalco perhaps. But